How ugly is it out there?
Well, look, from an economic standpoint, it's improved substantially.
What about the volatility within the hedge fund business,
within the
investing?
Yeah.
I can't get a straight answer. How bad is it?
Hedge funds have had a tough 6 weeks, particularly those focused on event strategies. So the better performing guys last year are probably flat to down 5 this year, which is disappointing.
Yeah.
Guys that had less stellar years last year are around flat to up 3, so certainly underperforming equities.
Are we at a point where at the end of the year many hedge funds will go out of business because they're never going to get back to their so-called hurdle rate? Is there going to be a churn in the business next year?
No, losses have not been substantial enough the past 6 weeks.
I agree.
Put people substantially below their high
But this is critical.
But there will be churn. There's always churn.
I would suggest the media has been gloomy about the overall industry where, yeah, it's ugly, but am I right? It's not that ugly?
Oh, no, it's not disastrous. I mean, look, the bottom line is if you had a great year last year and you gave some of those gains back, people aren't going to kill you. But if you've been mediocre for 7 or 5 years, then you're going to go out of business because you deserve to go out of business.
That's the first common sense I've heard about this in 6 weeks. The world's coming to an end, except for Bill Ackman.
Yeah. Well, I mean, we were emailing yesterday and you wrote you don't see anything that's earth-shatteringly attractive. I mean, you're a hedge funder with a gorgeous tie. Isn't it your job to find something attractive? You just stuffing your money in a coffee can? What are you doing?
You can only take what the market gives you. Right? You can't force it. So the point I was making is that, look, you can't reach for 20% or 15% returns unless you take a tremendous amount of risk. So you're better off in this environment to try to go 4, 6, 8% and grind it out. It's a grinded out environment.
Let's mark it. Somebody came on surveillance and said you don't get return without risk. It's amazing. An honest man.
Very exclusive, right? Troy, in terms of what opportunities were created by the turmoil, the volatility that we saw, are those opportunities that you can ride through the rest of the year?
Yeah, we think so. Actually, the event space, we'd argue, there was a lot of liquidation by multi-strategy funds and weak hands in general. So a lot of those names should bounce back the next 2 to 3 months, provided we don't have another leg down in the correction, because we think we had the correction. Over the longer term, the best opportunities are still taking advantage of the disintermediation of the banking system. There's no more prop desk competition, no more market-making balance sheet. So things in complex fixed income like mortgage-backed securities or specialty.
The people that facilitate your world, they're called prime brokers. How is their world into the end of the year?
Well, look, I mean, prime brokers' businesses were doing better recently because people were starting to use more leverage.
We got vol, we got more leverage going.
More leverage going on. People have cut risk substantially, so their margins will probably be impacted to some extent. But prime brokerages are strong, stable businesses that mainly make money from stock lending and
I got like 8 more questions. Okay.
We got to run?
I got a million more questions for Troy Gayeski.